Sir, is it important for the banking institution to develop and determine the risk appetite, and how much it will be helpful to deal challenges?
Thank you very much, Abad. Risk appetite is a beautiful concept actually, and sometimes we use it as a phrase, and we miss actually the essence of it. So I also have a risk background. So I introduced risk appetite statement way back in Alfalah, and Basel II was really kicking off at that time. And the real beauty of Basel that as I saw, was that actually you can actually summarize the whole of a risk into a number. So I found the concept pretty beautiful. Taking that concept into AML is very relevant. It is relevant because a compliance officer's job basically is to provide architecture, effective architecture all across the bank. And part of that architecture is that appetite that you can propose to the board and to the management. And how you translate that appetite into a very objective, quantifiable shape and form is an risk appetite statement. The risk appetite statement can take different shapes. It can be a very subjective statement of do's and don'ts. For example, State Bank has recently introduced internal risk assessment framework, where the banks are allowed to take various approaches of enhanced due diligence and simplified due diligence. So risk appetite statement can also look as a subjective statement of the sectors and type of products and type of customers, saying where you need what, where do you need STD or EDD. And similarly, the risk appetite statement can become even more objective and meaningful if you put in some numbers. I'll give you an example. The simplest form of risk appetite you can have, or criteria you can have, is how much of high-risk customers you will have in your portfolio. From there, you can kick other things off. You can talk about the risk that you are willing to take in for example, border areas, and how much of NGOs you will have in border area branches, or for that matter, in KPK. So you can take it forward on this basis. But for that, to have an effective risk appetite statement, the essential part is to have that assessment done. The national risk assessment is obviously helpful, but you need to assess your own bank as well as the kind of risk appetite your board actually has. Somebody spoke about, I think he earlier spoke about zero tolerance. It's a beautiful concept, and it's spoken but not probably practical. But in compliance world, we will have in our risk appetite statement a lot of zero tolerances, fortunately or unfortunately. But yes, in the area of the sectors that we want to go into, some bank will really shun the two provinces of Pakistan. A bank like ours would not like to do that. So it's not zero tolerance, but probably it would be EDD. So in short, the thing is that risk appetite statement is a very effective, quantifiable way of actually setting direction of the bank, not only for your own self, but also for the board. And also, it's also very clear-cut way to make the whole bank understand what exactly is the direction of the bank given the control culture they have. Lastly, I would like to add that control breaches would happen in every bank. That's how we learn, that's how we improve. So the risk tolerance and risk appetite is also about having those control breaches, ready and acceptability of having those breaches. Just a small example about it. Initially, when I introduced tolerances for operational risk of Basel II, a lot of people did not understand why I was proposing a fraud number to the board. They say the fraud should be zero. What are you talking about? I said, given the controls, I've done a risk assessment, and these are the controls. I have zero tolerance in an ideal state, but given the controls that we have, this is a likely number that we can project and present to the board. So that is how you prepare the concept of risk appetite and prepare the board for it. But I think every bank should be able to move towards that.